Thank you for being with us today, Amy. I'm going to turn this over to you and let you get started. Why don't you go ahead and introduce yourself?
Okay, so I am with the developer. We do employment services and programs. The two programs I manage, which we're going to talk about today, is the Work Opportunity Tax Credit and the bonding program. Both are U.S. Department of Labor programs, but they are incentives when they're looking for employment. But they're definitely incentives for the employers to give those folks an opportunity or a chance at employment. Let me know if you can't hear me, because I noticed, Taryn, you were fading in and out a lot. I'm not sure if the connection is real clear, but I'll go ahead and start. So WOTC, again, like I said, can you hear me?
I can hear you just fine. Okay. I think that the internet issues are on my end, and so I'm hoping that everybody else isn't having an issue.
Okay, great. So again, WOTC, the Work Opportunity Tax Credit Program, is a federal incentive. It was renewed this past December 31st through December 31st of this year. Normally, Congress renews it every year. This last time that it was renewed prior to December 31st of 2019, it had a 5-year renewal. So they wanted to go ahead and get it renewed. They had thought about tweaking the target groups, but they ended up just renewing it for a year, and they'll readdress it again at a later time. What that means for an employer is if the program does expire and go into hiatus, let's say December 31st of 2020, employers are always encouraged to continue to apply for the certification to take the tax credit on each individual. It's a very easy process, and I'll show you that in just a moment. But the reason that we encourage employers is because sometimes they allow applications to be filed late if the congressional renewal doesn't happen on time, but we have seen it times that it did not. So employers are encouraged, even if it passes the expiration date, to continue to apply. The good news about WOTC is that it can be combined with state tax credits, federal bonding program, OJT, and registered apprenticeships. For instance, state tax credit, DSS offers a tax credit on the target group that we offer a federal tax credit. It's temporary assistance to needy families. So the long-term one, DSS offers a state tax credit, and it doesn't interfere with if you get a federal one. Federal bonding, of course, is uniquely different. It's not a tax credit, but it does offer some risk mitigation for employers that hire individuals that have judiciary backgrounds. On-the-job training and registered apprenticeships, the thing to remember about that is work closely with your CPA. We don't give tax advice as far as filing, but if there are any federal subsidized wages, you can't count those towards calculating the tax credit, and I will show you how to do that in just a moment. You have to wait until the wages are fully coming from you, the employer, or partially, but that is the only wages that can be used to calculate the tax credit. Otherwise, you can count the hours, and it's very specific. I know sometimes there is negativity with the word felon associated, and people are trying to pull away and go to judiciary involved. This is ex-felon target group because it is specific to someone that has been convicted or released or on a work release from a felony conviction. So it doesn't apply to misdemeanors or records of arrest. And they would have to be hired within a year from release for this target group to be certified. Of course, the two DSS programs that are targeted groups are temporary assistance to needy families. That used to be formerly known as welfare. There is a short-term and a long-term. You don't have to worry about understanding the qualifiers. We're going to give you some information afterwards that'll explain all of that. And actually the screening forms will tell you more in detail about what those target groups and people normally identify with them. They'll know exactly what they are, so they'll identify in a screening paper that you have or that we'll provide. Supplemental Nutritional Assistance Program, another DSS program that used to formerly be known as food stamps. That individual would be 18 to 39 and receiving 6 months up to including the higher month. So there are qualifying within each target group. They have to meet certain qualifiers, and that's what we are here for, so that we can certify that they meet those. There is a designated community resident. We have that in South Carolina. If you have any locations in North Carolina, just be assured they don't have these. But we have empowerment zones within certain zip codes and within certain addresses, so not inclusive of all zip codes in Columbia and Sumter. The Rural Renewal Community is exclusive to Marlboro County. So if you hire an individual between 18 and 39 that lives in either one of those areas, that could be a potential tax credit. The vocational rehabilitation and ticket to work participant. Vocational rehabilitation, if they've been served or are currently being served or had been served within the last 2 years, that'll qualify someone. So even if you're not aware that South Carolina Voc Rehab has employment services, that would be a really good place for you to contact and see what kind of job training that they do with their individuals and how they do job placement as well. Ticket to work participant is someone that went through one of those vocational rehabilitation programs that was approved through the Social Security system. They don't actually have Voc Rehab, but they do have pre-approved programs that actually would certify someone for you to take a tax credit if you hire them. The Supplemental Security Income recipient, not to be confused with the Social Security benefit. There is a long-term unemployed recipient. That's actually our newest target group. It started, or I think it was January 2016. That's an individual that has been unemployed at least 27 weeks in the year prior to hire, or in the couple of years. It doesn't really matter. It could be 27 weeks. It could be 5 years. It could be 2 years. If they were unemployed and within that unemployed period where they received no wages, if they received UI, the unemployment insurance benefit, at any point in that period, then they would qualify you for a certification. We also have unemployed veteran and disabled veteran target groups. I am going to go into that. In this part, you don't have to remember. That's up to us to remember to be able to certify. But for the purpose of WOTC only, an active duty person would need to have been active for 180 days or had been discharged for a service connect disability if it was less than that 180 days. And either one of those, so it'd be 180 days or discharged for a service connect disability, but either one of those would have needed to been discharged more than 60 days prior to being hired if they served a term longer than 90 days. And we'll come through that. We do have access to some veteran documentation through a civil service member relief website, but the employer ultimately is responsible for providing any type of veteran documentation. So keep that in mind if someone identifies with a veteran target group. The good news about WOTC is most veteran programs require that they have honorable discharge, but with WOTC, that is not a requirement. So they're not excluded. And the 501c nonprofit businesses, and I know everybody on here is a for-profit business, but if you know anybody that is actually running a nonprofit, if they hire a veteran, a qualified veteran, they can take it a tax credit as well. It would be a little bit different. It would come off of their Social Security burden instead of a profit business, which it would come off of your general tax liability. So a little bit more about what a qualified veteran, after they meet the qualification of being a WOTC veteran. There are several different targeted groups within in that. They can be a veteran that received SNAP 3 months in a row within any 3 months in a row in the past 15 months before the hire month. A disabled veteran, 10% or more disability that has been discharged within the past year. Disabled veterans that have been unemployed 6 months or longer, and unemployed veterans that have been unemployed 4 weeks up to 6 months, and 6 months or longer. They don't have to have disability. The highest weighted target group, because they are, most of them for the average is $2,400 max tax credit in the first year of employment. But the disabled veteran that's been unemployed for 6 months or longer can be up to, I believe, $9,600, but we'll see that in just a moment on a chart I'll show you. Who is not eligible? So if a rehire is not eligible, they have to be a brand new hire, never worked for your company before. And this program is about giving new opportunities, and this would be someone that you had no reference on as far as, you know, you don't know what their work ethic is like. They have a barrier, you want to give them a chance. So make sure that they have not worked for your company before, whereas we don't always detect that. And we may provide a certification on someone that has worked with your company before, but just know that the IRS has wage records going back infinitely, so they would be able to know if an audit occurred that person was a rehire. So you want to be very cautious to make sure you're not taking a tax credit on someone that was rehired. Let's see, and definitely you don't want to try and take a tax credit on someone that's a relative or a non-relative dependent. Applicants whose requests for certification were not filed within 28 days of the start date, so there is a DOL timeliness on getting the certification request into our office. Self-employed individuals, that's a contractor or vendor, someone that's billing you for their payment, or on 1099 employee. The thing to remember there is that federal taxes must be deducted from their wages in order for you to take a tax credit on the individual. So the submission requirements is super easy, and keep in mind there is no federal reporting with Work Opportunity Tax Credit. You get the certification from our office, you get to calculate the tax credit. You don't have to do any additional reporting or anything like that. So there's 2 forms. They are on the Department of Employment and Workforce website. We keep them there because one's on the IRS website, one is on the DOL website, so we don't want you to have to go to 2 different places. And periodically, when Congress does renew the programs, they update these forms, so we're going to keep the most current updated forms on our website. The IRS form 8850 is a pre-screen form. So it kind of gives you an indicator on whether or not this person identifies with any of the WOTC targeted groups. We have employers that put that in the hire paperwork, and they just leave it there until they make a hiring decision based on, you know, the qualifications and the references, and then they review this form out of the application packet and decide whether or not to provide the second form in the orientation process, where they fill out the W-4 and the I-9. At that point, if they see that the person identifies on the 8850 as one of the targeted groups, they provide the ETA, which is the DOL form, the 9061 form, which provides additional details for us to be able to know which route to look for certifying it. And again, you have to get the submission in by 28 days prior to, or I'm sorry, after the start date. 28 days within that start date is a DOL requirement, and we don't have any way to play with that. Now, if the U.S. Post Office is closed, you know, one of the weekdays is closed and the 28th day falls on that, you can get it in the following day. But we do have another way that you can get it in if you prefer to do online submission, which is what I highly recommend, and I'll go over that in just a second, because you can get your certifications or the denials off of the web portal, and you'll know if we're asking you for additional information. Supporting documentation, I would not hold it up when you're submitting a timely request for certification. You can always submit the supporting documentation afterwards. And the good news is with federal bonding, there are no limits on these credits that you can take. And again, they're first-year credits. We do have one that's a 2-year credit, and that's the long-term TANF, and I'll show you that in just a moment. But if you get 10 credits and you're able to calculate it out all the way to the $2,400 max for those particular credits, that's $24,000 that you can reduce your general tax liability with. So we highly, highly, highly recommend that every single business screen every single new hire, regardless of what the position is, because you can't look at someone and tell what their barriers are. And some of these barriers that WOTC has defined don't even seem like barriers to us. So, you know, an unemployed veteran doesn't seem like a barrier to me, but hopefully, you know, that helps veterans get opportunities that they would not have. And it is one of the WOTC defined barriers. I'm going to move on to the next screen. So again, we have the forms on our due website, but you can also find the DOL 9061 form on their site, and it will lead you to the IRS site as well to get the 8850. We have 2 submission methods. The first one is the one that we highly recommend. The e-file method, you can sign up for an account on our WOTC South Carolina portal, and we'll provide this to you after the webinar. Or you can mail it in, because those forms, and again, if you do the portal method, we don't want you to mail the forms in. But you can mail them in if you want to, and you're not comfortable doing it through the portal. But you do need to keep a copy on site for 4 years after a certification and the taxes like if you take the tax credit, because it is an auditable IRS form. So you want to make sure that you keep that retention 4 years, those forms. What to expect after you submit the certification forms, the 8850 and the 9061, we're going to review it. And make sure that everything's completed accurately. If we get the physical form, our system won't even allow errors to be entered. So that's part of our 48-hour review, is if you use the online portal, it'll kind of guide you through and won't let you put any information in that's incorrect. You're going to get a certification or denial. Most of our target groups, the DSS ones for SNAP and short-term TANF, the VOC rehab, the long-term unemployed, those are automated. So you'll get an answer back within probably week and a half. Some of those, a very small portion of them, follow a manual process. But South Carolina is operating in the first quarter of 2020. We still have neighboring states and states across the U.S. that are somewhat 2, 3, 4 years behind. So we are one of the more productive states in providing a determination timely. Don't get alarmed if it takes, 6 months, because it may be that we don't have the information that we need. We deny it. You have a year from the denial date to appeal it with providing documentation that we couldn't get a hold of. Some of those that take longer would be if an individual lived in a different state and we had to wait on that state to provide feedback on the benefits that they earned in that state. Like I said, some of the states are a couple years behind, so it does affect our out-of-state ones. Additional documentation may be requested if we provide you with a denial. Again, read that denial, make sure that it's not asking for additional documentation like a disabled veteran proof. We don't have access to that. Sometimes we can get veteran active duty service dates, but we do not have access to disability information. If you do appeal a decision within a year from the denial date, then we'll do a final determination and provide that back to you. And when an appeal occurs, you would upload documentation into the system, so it's as easy as just uploading the documentation and connecting it to that individual that you applied for through our online portal. Trying to make everything as easy as possible. So taking the tax credit, what does that look like? It's very easy, and I'm going to show you a chart in just a second on the next slide. If you definitely need to receive a certification from our office first before you take a tax credit. The certification is not the tax credit. You will have to do some calculation afterwards. And you'll need to make sure that the employee met the minimum retention period, and you'll want to calculate it up to the maximum qualifying wage cap. And that'll make a little more sense on the next slide. But a for-profit entity, and again, make sure that you communicate with your CPA and they understand the program. If not, they can contact the IRS and get the ins and outs. But all of the instructions they will need is on the 8850 instruction form. To file the tax credit, your tax preparer is going to use the 5884 and the 3800 IRS forms. And again, the tax credits will reduce your general tax liability. If you get certifications that are more than your general tax liability, there are some carryover options. So you'll want to discuss that with your CPA as well. If they're not familiar with it, have them call the IRS and ask what those qualifying events are to be able to carry some of those tax credits over. A non-profit entity for hiring veteran new hires only. So the other target groups don't apply to nonprofits, only the veterans. They would file the tax credit with the IRS 5884C. So this is the top portion, or the non-veteran target groups. The calculation chart, which is on our website as well, on the DO website. The first target, or the first column to the left, lets you know what the non-veteran target groups are. And again, the qualifiers, the individual that's filling out the 8850 will be able to identify with them or not identify with them. You won't have to worry about knowing exactly what it is and helping them answer these questions, because the forms are pretty clear. But on the first column, so there's 2 tiers in which you can take a tax credit once it's certified. If they come to your business, you hire them, they work 80 hours and then they decide it's not for them and they quit, but you got a certification from our office. You don't want to take that tax credit because the minimum, the least amount of hours that they can work is 120 for you to be able to take 25% up to the wage cap for that particular target group. For instance, if you look the third one down, SNAP, which was formerly known as food stamps, if you get a certification, they've worked 120 hours or below 400 hours, so up to 399, you'll be able to take 25% of their first year's wages up to the $6,000 wage cap, and it'll equate to a maximum of $1,500. Once they work 400 hours, you would move over to the next column and you'd be able to calculate 40% of their first year's wages up to that maximum wage cap of $6,000. And the max tax credit in that case would be $2,400. The long-term TANF is the only target group that the lower tier is not applicable, but they would have to work 400 hours in the first year, and then in the second year, it is the only 2-year tax credit that we do have. It would be 40% up to $10,000 the first year, and then 50% up to $10,000 the second year. So that can equate to $9,000 over a 2-year period. And your CPA would kind of work through that and be able to tell you what's taken in what year and appropriate. So if the person works and doesn't earn in their second year up to the $10,000, you would just take 50% up to whatever they earned below that. The second one, and this is the lower half of that sheet, I just couldn't fit it all on one screen. But it is, again, on our DO website. The second half is the veteran target groups. There's the veteran receiving SNAP, which is the average max tax credit of $2,400. But if you look below that, entitled to compensation for service connect disability, hired 1 year after leaving service, you notice that the maximum wage cap jumps to $12,000. So it gives them more weight to the tax credit if you're certified to take it. The unemployed at least 6 months veteran jumps up to $24,000 of their first year's wages. So you could possibly calculate up to $9,600 if they stay, over the 400 hours. So this chart is pretty simple once you sit down and look at it for a few minutes. It seems like a lot of information now, but I promise you it's not difficult, because all of you have time card or timekeeping systems that's going to keep track of the hours they work the first year. Once you pass 400, you don't even need to worry about the hours. And then once you surpass the maximum wage cap, you just take the maximum tax credit. It's only when it's below the hours in the 2 tiers or below the max wage cap that you have to do any type of calculation. So that's the for-business calculate or for-profit calculation. The not-for-profit calculation, and again, these would be 501Cs, something to that nature, if they hired the veteran target groups only. And again, they can take tax credits that would reduce their Social Security burden portion of their taxes. And theirs is a little bit different. You can see the 1625 in the first tier, 1625%, and then it goes up to 26% on the worked at least 400 hours or more. So if you know anybody running a not-for-profit, please let them know. If they hire veterans that qualify, they can take a tax credit. So you want to stop, and if you have any questions WOTC, how many of you have heard of WOTC before? Go ahead and unmute.
I think I just unmuted everybody, but
Yeah. Has well, let me see if I can. Have y'all heard of WOTC before, or the Work Opportunity Tax Credit? Is everybody comfortable with the information?
I am.
Good. Have you heard of WOTC before?
I had.
Good. It is definitely a great incentive, especially with the carryover, if you have more tax credits that the business is taking, that's reduced tax liability. You can act WOTC. That I strongly believe every single employer should be screening every single person that they do hire for it, is because that keeps the money in the employer's till to remain healthy, continue to hire, reinvest back in the business, and even the local community. And keeping South Carolina economy healthy is, keeping the tax dollars in our economy. So if everybody's okay with this, and again, we'll provide everybody with an employer business letter that'll kind of give links and information how to get started. Highly recommend. I know some employers do the screening and the hiring process with the 8850 and then the onboarding process, the 9061 form, but to make it simpler for everyone, I always, just do what's easiest for you, but I would put both the forms in the onboarding packet with the I-9 and the W-4, and that way you don't have to worry about it. So the next program is federal bonding, and this is also a U.S. Department of Labor program that helps in businesses mitigate risk when they're hiring individuals that are high-risk job seekers. It offers employers a Fidelity insurance policy to cover the employer, and it would cover them in cases of employee acts of dishonesty. And, if you lose money because of theft, forgery, embezzlement, things like that, or property with a monetary value, it's good to know that there's an insurance policy out there that will pay the employer for their loss. Who does it cover? So it does cover judicially involved or judiciary involved individuals. It doesn't matter if it is a conviction of a felony, a misdemeanor, or a record of arrest. If someone comes to you and they have the skills that your business needs to keep your business going and operating smoothly, but they have this barrier and you would normally overlook them, you may want to give them a second thought. Because well, before COVID, the unemployment rate was very low. So it was hard to find qualified individuals, and this is a great program. It's been in existence since 1966. They have less than a 1% claim rate over all of those years, 51 years. I think it's 51 years, probably more than that. But they have a very low claim rate. So it does prove that individuals that are offered an opportunity or a second chance, for the most part, are going to do their job and be grateful that they have vital employment. And having folks vitally employed definitely helps reduce recidivism. Recovering addicts with a judiciary involvement, anybody with poor personal credit or lack of work history, because some cases when somebody comes out of prison, they don't even have a work history that you can verify. Dishonorable discharge, again, are not excluded. So we can federally bond any of these individuals for you. And what it does cover, again, is acts of dishonesty committed by a covered employee that has committed forgery, embezzlement, or larceny and theft, and your business takes a loss. What it doesn't cover, of course, is poor workmanship, salary job injuries. We all know that's not part of it. That would be workers' comp. It doesn't cover any bail, court, or contract or licensing fees, anything like that. So it's going to be strictly acts of dishonesty that fall under forgery, embezzlement, larceny, and theft. So the benefits to the employer. So you get to mitigate risk because you're covered. We can cover the business in $5,000 increments, anywhere from $5,000 to $25,000. It does not cost the employer to have this coverage. You just have to be registered in SE Works. The individual has to be registered in SE Works because that's how we track the federal dollars that we pay for the bonds. There's no paperwork for you to do. I do all of the paperwork, and it'll provide you with 6 months of coverage. Again, no cost. That's the best part. No cost, and it'll automatically terminate. So you won't even have to do any termination paperwork. If at the end of the 6 months, the bond is ready to terminate, you can, because you will receive a bond paper, you'll be able to, as the employer, contact the insurance company, which is currently Union Insurance Group. It is underwritten by Travelers, and ask to be covered for another 6 months, and they will quote you a market rate at that point. I don't believe that it's expensive, but most employers are satisfied with the first 6 months that they don't have to pay for. We don't collect any kind of payment information from you up front to continue the bond. It automatically terminates, and you can renew it if that's what you want to do. I recommend, just working with your general business insurance or your general liability, just to see what they would and would not cover after a 6-month period. But most employers build up enough trust with an individual after 6 months to where they continue the employment. We definitely ask that if you can't rebond the person in 6 months, before you let them go, to give us a call. And depends on how much funds we have available, we may rebond them for you in lieu of termination. So benefits for the job seeker, you may see someone come with a federal bonding voucher. They know about the program. They came from SE Works. They have a voucher. The voucher is not the bond itself, so make sure you call and ask for the bond to be provided to you. And my information is in that voucher, and I'll show you what that looks like in a moment. But they use these vouchers as leveraging tools to let an employer know that they're looking for a second chance or a first chance at employment. It doesn't cost them either, so you're not going to deduct anything from their wages to pay for the bond. And again, it does reduce recidivism for those with judiciary involvement. So there are a few restrictions and things that need to be met so that we can bond them. They must be registered in SE Works, both the business and the new hire. In this case, it can be a newly hired individual, not a brand new hire. So if it's a rehire, that's okay. We can still bond them if that's contingent upon returning to their job, because you may have had someone that was a great employee. Maybe let's just use the example, they went to jail for not paying child support. That doesn't make them a bad employee, and the best thing for them is to remain employed. So you can bond them if that's a condition of their employment and bring them back. So they don't have to be a brand new hire with federal bonding, but they do need to be newly hired. And there are a couple exceptions to that, even not to confuse it anymore, but they will need to have federal taxes deducted from their wages, just because, you know, it's a no-cost program, but federal taxes do need to be paid as they would normally. It will assist with current employees in 2 instances to prevent a layoff aversion. And an example of that would be as if an individual, you know, went out one weekend, they maybe got a DUI, doesn't make them a bad employee, you know, unless they're truck driving. But, you know, there are different things that can happen. But until they get through that court system process, it may be that you want to keep them on, maybe it's your bookkeeper, and you want to keep them on and do layoff aversion, but you would be more comfortable in having them federally bonded. We can do that. We can federally bond that person to keep them from getting laid off due to that incident. Also, to help secure promotion, let's say there's an individual that did not have any work history, but they've showed amazing skills and talents and abilities, but you have no idea how they manage money, and you have a management position and they're asking you for that position, but you find out they have maybe bad credit. We can bond them if it will help you make a decision to secure that promotion and give them that opportunity to improve their lives. Ineligible would be current employees, except for those 2 exceptions. They do need to meet the legal age requirement in the state in which they are working. Self-employed, again, and independent contractors, anybody collecting money through or payment for their services via 1099 or invoicing would not qualify to be federally bonded. So they definitely have to have federal taxes deducted from their check. So the steps for the job seeker, if you get someone that comes in and you want to give them a shot, ask them if they're registered at SC Works. If they're not, sit them down at a computer, have them do it online. They don't even have to go anywhere. They can obtain a voucher even from SC Works. It's not necessary as long as they're registered, and I can verify that. But they do distribute the vouchers with their resumes and applications. Just remember, again, that is not the bond in of itself. You would need to contact me, and my information would be on that. This is what the voucher looks like. So it'll have their name in the top. My information is in the middle, and the local SC Works individual that provided them with the voucher will have signed and put their phone number on there. And again, we go through SC Works because that's how we track the federal dollars that we spend on these bonds. But another good reason to work with SC Works is that they can help you and assist businesses with finding employees or training employees. There's a lot of services that they can offer to the businesses and to the job seekers that you know, we think that everyone could benefit from. It's a great partnership, especially if you have a small HR department or a hiring office. You can work with SC Works as a arm or an extension of your HR to help you recruit. When they do put job ads up on SC Works, it does go all across the state. It's not limited to your region, so you do have a lot of folks that are looking for jobs. You can kind of let them know the parameter of how you want your job advertisements to be put up. If you want to see the first 25 apps and close it, they'll fix that. If you want to see it for 25 days and get applicants, they'll fix it to where you get it that way. If you want them to pre-screen applicants for you, they can also do that. So I would work with them as an extension of your HR. Steps for the employer: you would offer employment to the individual and set a start date. Contact me, the federal bonding coordinator. We have some generic emails that is in the business letter that we will send you afterwards. We recommend that you use the generic emails. You can contact me directly if you want, but that goes to everyone in our department's email inbox. So if I'm out, sometimes I do travel. If I am out of the office, then someone will be able to assist you quicker. You're going to provide information to us for the bonding process, such as your company, your FEIN, the employee, and we'll locate them on SE Works and get everything we need from there most of the time. But we do have more information on our due website under the employers tab, and you can always email us as well at the federalbonding@due.se.gov. And let me go back, the WOTC email, just in case, trying to find where we have that. Well, it is WOTC@due.se.gov. And again, all of that will be in the business letter that we email you afterwards. But that is it. Does anybody have any questions about these two wonderful incentives for employers? They do help broaden the capability of kind of broadening your fishing net for good qualified employees, and they do offer some good financial incentives and risk mitigation.
Amy,
I
have a question. Just for the good of the group, what kind of usage do you see statewide? What kind of recidivism do you see? Like, give us some feedback on like numbers.
Sure. So, and I don't have exact numbers. I am working from home, but just till we get
roundabout
crisis.
ballparks work.
Yeah, absolutely. I will let you know that a lot of the larger businesses take advantage of WOTC because they have consultants knocking on their doors saying, let us apply for these certifications for you. This is a tax credit you need to be taking advantage of. So a lot of them offer online application services, and they integrate the screening of WOTC into that application and onboarding services. We work with a bunch of consultants in South Carolina. In South Carolina last year, there was over $1 million worth of tax credits certifications issued out to the state. I think it was around $1.5 million. And the small to medium businesses, we find that they don't necessarily know about the program or understand the program, or think that there's a lot of federal paperwork with it, and there's really not. You submit 2 papers that the actual candidate fills out to us to get certified, and then you hand it off to the CPA in most cases, and they do that for you. They'll do the tax credit for you. With federal bonding, there was a recidivism study that was done back in 2014. We find that individuals that have the judiciary involvement, usually within a 3-year period of being released, had about an 18-point-some-odd% of recidivism. But over a long period, if they were employed over a 5-year period, or unemployed, I'm sorry, if they were unemployed or having trouble keeping employment, it jumps up to 36. So 36 and some odd % recidivism. So keeping individuals employed is keeping, the state costs down on recidivism. It costs tens of thousands of dollars to house someone in a prison. If you keep them bodily working and they're able to take care of themselves and their families financially, they're appreciative of that for the most part. And it does keep costs down in our state to offer individuals with judiciary barriers employment and keeping them bodily employed. But you want to mitigate risk and protect your business. So, putting money in your pocket and your employers, well, not really in their pocket, but to reinvest back in the business or however they see fit, and keeping it in our economy is the benefits of WOTC. And again, small to medium businesses should be taking advantage of this. It's just another step in the paperwork process. They actually get the applicant to fill out the paperwork and they submit it, and then they pull the certifications down, pass it off to the CPA. If the CPA, whatever relationship you have with them, they may require that you calculate the tax credit before you give it to them, or they may do it for you based on the hours and the wages. It's very simple, and it's very much worth screening every single person from, the maintenance folks to the janitorial folks to the accounting folks to your HR manager if you're hiring a new HR manager, and even drivers if you're hiring them and they are definitely having federal wages taken from their checks. So you want to make sure that you screen every single person to take advantage of this. I tell everybody that puts those forms in the onboarding packet, I would probably, because the 8850 has a lot of instructions, I would probably put those in plastic sleeves and make them available, but only have them fill out the front and back of the one form. And, you know, just have the instructions available for everyone in some plastic that can be, you know, reused. And the same thing with the 9061. In general, folks don't have questions about it because it's, you know, if they've applied for a couple of jobs, they've ran into WOTC before. But if anybody has any questions about what it is, just let them know. If they're hired, it's an opportunity for the employer to take a tax credit if they meet certain criteria, and they usually understand that. I've never ran into a situation where I've heard an employer say, applicants refused to fill this out. They are optional, you can't make them, but you know, most of the time they're willing to fill it out.
So based on like usage rates, you know, we talk about the federal bonding program for those who are potentially risky hires, just trying to get them back into the workforce, et cetera. Based on experience, you know, even in anything related to trucking, do you have any kind of feedback on who's actually had to take advantage of those programs? Like they get in, they utilize it, but who's actually had to say, okay, there was theft and we need to make a claim?
Yeah, so once it gets to the point after we purchase the bond for the employer owns the bond, and then if a claim is made, we're never made privy to it. But I have had information come back from federal bonding that you know, over a 50-year period, it's less than a 1% combined that an employer has to make a claim. I've never had an employer report back to me that they've had to make a claim as long as I've been doing federal bonding or issuing the bonds. It will protect the business as far as, because your truck drivers are carrying items of value, you know, and if they're parked somewhere and they're caught taking stuff out and selling it, that's theft, that's employee theft, and you want to make sure that you are covered. And I know that you do have general business liability insurance and things of that nature. But if you don't have to make a claim on that, you know, it's better to make a claim because this is a no-cost program to cover you from those acts of dishonesty resulting in theft. But we don't really get any feedback from the insurance company or from DOL as to what industries have the most claims. They only give one big, you know, over a 50-year period, there's been less than 1% combined claims made. So that's a very high success rate for individuals that are bonded, because they know once they violate a bond, they can never be rebonded again. And that's a tool for them to use as they need it. And most of the time, if they have that voucher, they are definitely looking for an opportunity to prove themselves, and they don't want to mess it up.
Right. Well, I mean, I think these are two very valuable, potentially beneficial programs for employers. So then they're not taking money out of their bottom line.
Right.
They're using what's available from DO and the Department of Labor. And not only can they get that additional layer of coverage potentially, but then they can also do, you know, the WOTC for tax credits. I really appreciate you being on here today.
Absolutely.
It sounds like the comments that most of them didn't know about these things. So.
Yeah, it's not as well known with small to medium businesses, and that's what we're trying to do, is get the word out so that everybody can take advantage of some of the tax credits and the risk mitigation tools that the larger corporations know about and already take advantage of.
Right.
But I will email you the business partner letter so that you can distribute it to, or you may already have it, but distribute it. Oh, you do?
I believe so, from when you visited the office. Now, you're okay with us sending out the PowerPoint as well?
Yes, absolutely. They can
Wonderful.
review it, and the emails are in there as well, so they'll be able to get in touch with us with the generic emails, and the website links are in there as well.
Right, and I know those charts were of interest, just to kind of put a tangible.
So,
So,
and the charts for calculate the tax. Yeah. And those calculation charts, again, can be found on our website, our Do website, under the Employers tab. And the web address is in the Business Partner Letter, but they're downloadable PDFs, so you'll be able to download those and print them out or keep them on your desktop, use them as reference. And if you have any questions about the calculation chart, you can please feel free to get in touch with me. I'd be happy to go over them with you. The only thing that I can't do is give tax advice because I'm not a licensed CPA, but I am absolutely happy to go through these charts with anybody that has questions.
oh, are there any other questions before we close out today? Go ahead and unmute yourself, or hold on, let me check the chat box. You are most welcome, Mike. I'm sure Amy, I will. Amy likes doing this presentation. She likes making people aware, and she is a wealth of knowledge. So we'll send out her contact information and the copies of the program's PowerPoint presentations to you shortly, and then you feel free to share it. All right. Thank you all for attending today. Stay tuned for more on what we have coming out. Thank you, Amy.
Thank you so much. Y'all have a great day.
You too, hon.